Okay, g'day everybody. Good morning, good afternoon, good evening. Hope everyone is well. G'day Hensy, Jean, Interim. G'day everybody. Shoot. Alright, sounds like I'm coming back. Okay, just get it loud and clear. Thanks Rick, you're on the ball. Arturo. Alright, hope everyone is well. Erebus, Richard. Okay. So welcome to Wednesday's Traders Workshop. G'day, Four Candles, Musty. Now, just a bit of housekeeping before we start, folks. YouTube have seemed to be defaulting back to low resolution. So if you're having trouble seeing the content, just adjust your settings up in the corner. The bottom right hand corner of your screen, there's a little cog, little settings wheel. Just put it up to maximum resolution and away we go. So g'day Noble Line. All right. Now, I've got a lot of content to get through tonight. So what I will do is we'll just hold off on the questions if we can until the end. And then we'll address those at that point in time. So, all right. Hope I'm coming through okay. All right, looks good. So, all right, let's make a bit of a start, folks. So, thank you all for your company. Welcome anyone that's new as well, of course. So, all right, let's jump in. So, welcome to the Traders Workshop. So, let's have a look at the topics for tonight's or today's workshop. So, we've got how to avoid 70% of failed breakouts, or how to avoid failed breakouts. Now, this is the extended version. So, there's a lot more content than previous, so as well as the original content, just as a bit of a refresher. So let's make a start. So, all right, so what will we learn? So what are we going to learn in this workshop? Let me get my pointer out. Okay, there it is, good. Oh, so we're going to learn what is a breakout, types of breakouts, why do so many breakouts fail, what to look for prior to the breakout, how to identify accumulation or distribution, what are the best types of breakouts. Okay, so what is a breakout? G'day DJ, Centurion Robert, Mike, Colin. Okay, so what is a breakout? So the technical definition, of course, is a breakout. A breakout is when price moves A breakout is when price moves outside a defined support or resistance level, generally on increased volume. A breakout can demonstrate increasing volatility and momentum. Breakout traders enter a long position after the price breaks above resistance, or enter a short position after price breaks below support. So, types of breakouts. So in this example here, we've got our resistance zone here. So we've got prices moved up, got the resistance zone here, prices pulled back, price has then broken through the resistance here, and away we go. And the same applies in reverse for the bearish situation. Price pushes down, creates the support, or is support, or previous support, pushes back up, breaks through previous support. So that's the basic diagram. So let's have a look at the types of breakouts. So the first of these is from a range. So here is our bullish example from a range. We've got the range bounded by resistance and support. And the bearish example where we've got resistance created and support here. So we've got ranging price action, and price breaks through the bottom of the support zone. So let's have a look at this example here. So here's an actual chart example. Now, the charts, the examples that I'm going to show here are going to be from a variety of instruments and a variety of time frames. So the concepts that we're having a look at here are concepts of basics, demand, supply and demand. So time frame is irrelevant, and the instrument is irrelevant as well, because price action is price action. So what we've got here is we've got Price has created a low here. We've got a climactic low here. We've got prices then driven up hard here. It's broken through the downtrend anchor here. It's come up to resistance here. Whether there's resistance here or not, it doesn't matter. It's created its own resistance or its own pivot high or swing high. Price has pulled back. We can see our corrective structure through here. Price has pushed back up. Price has pushed back up here to create the potential breakout. So we've got bullish sentiment leading to bullish order flow. We can see it through here. Price pulls back. And then we can see the bullish order flow in the price action here. So far so good. Okay, so now we've got the next candle breaks through resistance. So looking good. Okay, now we've got a candle which is a dark cloud. Dark cloud. So price has pulled back into the breakout level. So at this point we'd be probably getting just a little bit worried. Now we've got another attempt at the high. You can probably just see that there. We've got a little gravestone doji or a long-legged doji. Okay, now price is pulling back. We've got a lot of indecision here. Price is pulling back. So at this point in time, I can imagine we're probably getting a little worried here. So then price pushes back down hard, creates a false break situation, down hard, another attempt here, and then straight back down. So how does this feel? I'm guessing probably a little bit like this. So let's have a look at another example. So we've got prices pushing up here. Nice bullish price action. We've got bullish sentiment here, leading to bullish order flow here. We've got prices created a resistance zone or prices coming into previous resistance. We've got a nice shallow pullback here, nice little corrective channel. Prices pushing up here, creating the potential breakout. Let's have a look. So we've got another couple of candles. We've got so far so good. Prices pushed up. Okay, and straight back down. So false break, stopped out, away we go. And I'm guessing people are probably thinking by this time, what the? So, and I guess at this stage we're probably thinking to ourselves that breakouts are terrible. And we're probably more likely thinking this about our computer and maybe our trading. So the statistics say this type of failure, this type of breakout has a 30% chance of success. So that's not high. So, epic fail. So why do breakouts fail? Let's have a look. Okay, so some of the reasons. Price may not have had time to absorb the supply or demand due to the sharp move in price. Let's just go back. Let's have a look. So see this one here, even though this is not a huge move from the low, we've still got a sharp move in price here. You see this? Excuse me. So price may not have had time to absorb the overhead supply or demand in the bearish case due to the sharp move in price. It's one reason. Another one is the bigger players intend to continue to accumulate or distribute holdings, and they'll create the false break situations. The bigger players intend to reverse the trend and are still accumulating or distributing their holdings. Bigger players may be testing or probing the level to ascertain the potential new supply or demand. So we'll have a look at a few examples of this, but there's other factors, but ultimately we'll never know. And we really don't need to know either. So, what to look for prior to a breakout. So this is what we want to see prior to taking a breakout entry. We want to see a steady trending environment towards the breakout level, which includes nice, smooth peaks and troughs. So a steady trend. We want to see price generally getting tighter, squeezing, ranging or consolidating just prior to the breakout level. We want to see signs of accumulation or distribution prior to the breakout level, such as continuation patterns. Now, I will show you quite a few examples of this, so don't worry if you're not absorbing this quite as much as you perhaps hoped you may. It'll all make sense shortly. So we also want to see signs of shakeouts and traps prior to the breakout level. And we want to see signs that the supply or demand has or is being absorbed, including reduced volume or range. Let's have a look at some examples. So what do we want to see? What are the best types of breakouts? So here's our resistance zone here. Price is pushed up. Price is pulled back. Price is pushed up into the breakout zone. So we've got this big leg here. We now want to see higher lows coming in. So we want to see the swings getting higher as price supply is being absorbed, overhead supply is being absorbed. So we want to see this bullish pressure before the breakout. And the same applies in reverse, with price creating the lower highs along support. So these are obviously idealized sketches. Now, in a range, we want to see the same structure. So we want to see price pushing up, some sort of accumulation prior to the breakout. So what we want to see is the fact that supply is being absorbed up here. Demand is coming in, creating the higher lows, ready to push price out. Same in the bearish instance. So let's have a look at a couple of other examples. So in this example here, price is pushed up. Price is pushed up to the resistance level. Excuse me. And then we've got prices pulled back, create a little ABC structure, or we could call this a falling flag. So here is our type of continuation pattern, which shows bullish pressure leading to the breakout. A bearish example, price has retested support, created a lower high. We've got a little bit of an ABC here. We've also got a little 1, 2, 3, and you can see just a little head and shoulder structure in here, or we could take this as a shakeout. Either way, we're creating distribution at this point here, ready to push lower. Let's have a look at a couple of examples. So in this example here, price is pushed up to resistance, whether this is resistance or it's previous resistance. Price is pulled back down. Price is coming up. So we're seeing the first signs here. We see prices pulled down here. It's created a little base down here, a little structure down here. Price is pushed out of this structure. So we can see buyers well and truly overwhelming supplies here. So there's an eagerness here to get long. Price is pulled back, losing momentum here, testing the breakout level here. Price is pushed up. So we've now got this big stretch into resistance, but we've now got this ABC structure right before resistance. We've also got a little shakeout into C before our push. So we've got A, B, C here, and this is a little form of spring as well, some of you may know. And then we've got our push through, another little accumulation, and away we go. Now, what's important to note here is that once price has made its move and it's accepted up here, price quite often moves very fast, because we've got all this energy through here that now needs to move. Energy through here now needs to move. We've got all this agreement here. price comes out, or equilibrium, price comes out in disequilibrium. Let's have a look at another example. So we can see this is not right on resistance, but we've got the structure before that gives us permission to take the breakout. So we can see the attempt here. There's been a bit of a false break attempt. The price really hasn't come back in. It's this structure here that is driving price. Let's have a look at another example. So this is out of my playbook. Got a nice uptrending environment. Price has created a high. Price has pulled back. Price has created another high. So we've got resistance within this resistance. Price has pulled back. Had another attempt here. Price is pulling back. So we've got this structure through here. Sideways structure. Price has come up. Price has tested supply here once already. Price has pulled back. Now notice here it's starting to respect the 20 period SMA. There's nothing magical about the 20 period. So we can now see that we're getting price is starting to hold within this top area. Price has pulled back. Price has tagged the 20 SMA again. It's created a false break situation under here. So a little bear trap here. So we've got buying pressure coming in. Price is pushed up and is now accumulating right under resistance. So we've already got this test of resistance here. Shakeout. Price is pushing up. Look at how tight it's getting here. So 20 period is now angled up. Price is squeezing in here, ready to break. So you can see here clear evidence from this little pop here. Little push here, sideways, and here's our break. So we can see here, retested the other area here. Came back, so here's our breakout pullback. Did a little shakeout through here to the point of breakout. Then off again. So you can see once price had made its mind up here, you can see there's a lot of momentum behind this move. Look how close it got to that. Well, let's have a look at another one. This is an equity. This is a stock. So price is pulled down, created the basing structure, little shakeout in the base. It's pushed up here. So we've now got our handle, got resistance across here. We've got buying pressure coming in here. You can see the volume coming in here. And we can see prices holding. So this is 1 day here. See here? So you can see the gap, the openings and closes. This is an equity, a stock. Price is pushed up. It's had one go already. It's pulled back. It's gapped down. It's gapped down to the 20 SMA in purple. You can see it's accumulating in here. We can see the volume's gone very quiet. But look where the majority of the volume is here. It's in this move here. So price is holding this bullish swing here. It's bullish thrust, going sideways. High, low, high, low, high, low. The very next day, price opens with a decent amount of volume straight through. So you can see it's hugging the purple 20 period, buying pressure. Even with gap opens and closes, and away it goes. Let's have a look at another one. Here's an example. Price is pushed up, created resistance across here. Got our basing structure, shakeout in the base. Nice big thrusting move here. Price has created a higher low in here. Price has retested again, retested the level. Price is pushing along here. Price is getting nice and tight in here. Still got high lows. Price is getting very tight along here. Price is then finally broken, and look at the strength of the break. Let's have a closer look here. Down the bottom here, we've got the volume bars. So you can see here, we've got the move up. We've got prices gone very quiet across here. Then in this region here, we've got narrow bars. Prices increasing. Sorry, volume is increasing. So something's occurring. See this volume signature? So we've got the weak low pullback, low volume, and we've got volume increasing from this point across. So there's the result. So you can see here, you've got to be very quick. You don't want to be playing around because this will move without you. But see the evidence right through here. So once again, little cup with handle that you hear me talk about a lot. Let's have a look at another example. Price is pushed down. Price is pushed back up. It's tagged 38.2%. It's pulled back, very shallow pullback. Price is pushed up. Created a little bit of a shakeout here. Pull back in here, high, low, right on the 20 period. So see it's getting nice and tight. Away we go. Here's another example within the structure. Big sharp move, little tiny shakeout, pulled back, accumulated, away we went. See how fast it moves? See the structure. Here's another one, yet another one. Resistance, wide accumulation, still holding higher lows though. Accumulation, way we went. Look at the gapping price action. Here's another example within the structure. Price is pushed down, gapping. Price is pushed up, create an inner resistance. Price is pushed down. Bear trap in here, push up. Got buying pressure coming in here. Here's our little accumulation through here. Away we go. All right, now here's another one. This is a stock, big gapping stock. Price is pushed up, low momentum push. Price is pulled back. It's pushed up, created resistance in here, created a structure through here, bit of a gap lower. Price is pushed down. We can see some nice bullish bars up into here. We can see nice little consolidation. So we've got a bearish bar, bearish engulfing, then an inside harami, an inside day as a harami in there. And we've got the push through. So the expanded view here, you can see price in here. Very small, very subtle, but this is it. So these are each day. So you can see prices just holding in here. So let's have a look at another couple of examples. Slightly different this time. So here's our resistance zone here. Price pushes down, pushes up and actually breaks the zone. So no longer is resistance quite as valid. So price in this example is creating our ABC or our flag structure right on resistance. So we've got our accumulation or our continuation pattern right on resistance. So this is still valid. In this example, they've probably tried to do a false break, but the bigger players now are saying, no, we want to accumulate. We don't care where we accumulate. So this structure is still valid and still intact. So this is just signs of bullish pressure. Here's another example. So we've got prices pushed down, prices broken resistance, but it's actually consolidated right above resistance. So this is another example that you probably haven't seen. Let's have a look at a couple of examples. Here we've got a stock. This is ORI, this is Orica here in Australia. So we've got prices created the resistance, prices pushed down, created the basing structure, broken out of the base, retested the base, it's pushing higher. You can see here it's actually gapped higher, creating a novice gap, bit of a shakeout, straight back. See, there's no accumulation before the breakout. So naturally they've used this as an opportunity to shake out, but we've still got a higher low. So then prices pushed up. We've now got the real move, and we've got the consolidation straight through resistance. And you can see the result. So let's have a look at another example. We've got CAD Yen, 4 hour. Resistance. Big basing structure. Test of resistance. Move lower. Through support, creating the false break situation. Straight back, we can see a lot of bullish pressure here and a big stretch up into resistance, and we can see the whole consolidation area around resistance. So see how this is not as respected, and price finally pushes. Now let's have a look at the 60-minute chart. So this is this area, but on a 60-minute. So price is pushed up. Got our ABC down. It's created, pushed back up, created a internal resistance, a little bit of accumulation here. Price is pushed back, pushing back up into resistance, push back down. Then this is probably more than likely news. We've got to move either side, shaking out both sides. Then we've got consolidation in here, and then the final break, retest, and then there's the real move. So these are the actions that the bigger players, and these are the sort of price action the bigger players use to shake out both sides. Let's have a look at another one. Here's REA Group. Price is pushed up, created this big base, got resistance through here. Price is created, had a test of it here, big stretch into it, pull back. Price is actually pushed out and gapped out. Now it's consolidating at resistance. We've got a little shake out the top, pull back, and then the final move is on. So let's have a look at this area in detail. So this area here is this area here. So price is pushed up. You can see the volume coming in here, and we can see we've got a lot of red volume in here. So this is above and below resistance. Then we've got this period here. Volume has gone very quiet. Right here. Then we've got our little push above, which is this one here. So a little shakeout move, little test of supply. Right here. Move back lower. Shaking out the early longs. Then we've actually got some high volume high volume green bars have come in early while it's still in the base, while it's still in this consolidation. So something's occurring. And then a couple of my little scan indicators, you can see where they've alerted, right in this little structure. So something's occurring, we can see it. Yeah, it is. So something's occurring. This alerts me that volume has been expended here for not much effort. Something is going on. And this is right after a little shake. So I've got a green, purple, and a light blue. They've all lined up inside. So I'm watching them. I'm getting ready to put my order above. So I've got everything that's fulfilled, what I want to see in here. So then even before, as we said, the price has gone, volume has gone quiet. And then there's the 3 bars the volume came in. So there's already been accumulation in here. And of course, away we go. So you can see the strength in the move. So, okay, this is all well and good, Mark. How do I actually trade this? Okay, so this is how we trade this. Price pulls back, creates our structure in here, gives us permission to take the break. Our stop needs to be under the structure that is going to be protected, which is the accumulation structure. So, now this protects us also if we get this little second false break scenario. It'll protect our position in here. Now, in the case of Forex, say on a 60-minute chart, 3 to 5 pips below. Here's a bearish example. Price is tested here. We've got our ABC or our complex pullback or our flag. Price is pushing back down. We can either use the extreme of the pattern or we can use the little right shoulder right here. And our entry, for our stop loss, and our entry then we can confidently take the break. When price trades through the resistance zone, creating the structure through here, we can actually put our stop loss below the ABC. We can take a scaling entry above B or above the first peak, or we can take our entry above the whole structure. So we can actually take 2 entries here, probably a little bit more aggressive, a little bit more conservative. Here's our structure above. So we've got our breakout consolidation above, and our move hasn't begun. So we can confidently say that this structure through here, when it's approaching here, we can confidently say that this is more than likely or probably accumulation above resistance. So we put our stop loss down here. Our entry can go on the breakout above the structure. So where to from here? So if these patterns appeal to you and they resonate with your personality or style, it's important to note these basic concepts. They work best in a trending environment. They are a prominent feature of market structure, therefore they work on any time frame. The pre or post breakout is a type of volatility contraction or a consolidation, continuation pattern, accumulation or distribution feature. The breakout is the result of a supply and demand imbalance or a volatility expansion. So, once again, if these patterns appeal to you, resonate with your personality or style, it's important to conduct the following. Prove this concept works for yourself to gain confidence. So how do we do this? We back test and we forward test this setup. So this whole setup within itself is a strategy. So define the criteria for the setup as you see it. Not as I see it, as you see it. Create your playbook of the variations of the setup. A lot of those examples are straight from my playbook. Train your pattern recognition skills to be able to identify the patterns and setups in real time. So, in summary, what have we learned in this workshop? So we've learned what is a breakout, what are the types of breakouts, why do so many breakouts fail, what to look for prior to the breakout, how to identify accumulation or distribution structures. We've learnt what are the best types of breakouts. So this concludes our little workshop. So thank you everyone for watching and your company. Are there any questions? Very good. Shane, Kiwi Shane. Thank you, Craig. Very good, Erebus. Erebus says looks like one of the entries is the breakout of the breakout. You're absolutely right. So some of you will know those as a rectangle or a Davis box as well. Yes, it's recorded, Craig. Now, Danelle, the risk-reward ratio for this type of trade, let me have a look. I'll just go back. Let me just go back to some of these patterns and let's have a look for ourselves. That's a good question. Great question, Danelle. See here, in this example here, our stop would be here or here. So we can see the types of explosive moves. Now, I'm glad you've raised that question because it's important to make sure you take your profits along the way. As Jesse Livermore says, pay yourself as Mark Douglas says, pay yourself as the market makes it available, because otherwise we've got a volatility expansion here. Oh, sorry, you can't see my... Sorry about that. You can't see my pointer. All right, here it is here. So your stop would be either here or here. So you can see we've got a very small risk here. So this whole area, this whole structure here should be protected. Now Jesse Livermore speaks about the line of least resistance. This is it here. The price is pushing up, pushing up, pushing up. So they're going to protect these lows. If you're quick enough, like we saw here, you can get in under here. So you can imagine the risk to reward here is probably 3 to 1 at least. So let's have a look. So let's have a look at a couple of others. This one here. See these? Now, you see the retest here? This is probably not a good example because it's 60 minute, but you can see here, even this one here, once it broke stop would be here. You can see the move is very, here, look at this one. See these? Let's have a look at a couple of other examples. See these here. See this bar here? Visually, look at this bar compared to the other bars. Maybe this one. See here? Back, oh, sorry, there's one there, but here. Look at this one here. Now, I've traded a lot of these as well. You got to be careful. You can't just you can't just go for broke on these, because see where price pulls back? You'd need to be taking profits. So the result? Key level as well. There's nothing else here. Those that don't believe in Fibonacci, whether it's relevant or not, look where price has pulled up. So that's good enough for me. Look at this one. Look at these bars here. Now, here's a good one. See here, if you didn't take profits here, it's tested the old high, back to your break even. Must take something off the table. Look at this one. There we go. Now, sorry, I've missed a few of the questions. Great question, Danelle. Okay, so Robbie said volume is based on tick volume. It is, Robbie. Now, some of you will say, well, oh, you've already said it, because Forex has got no central exchange. That's true, that's correct. Unless you trade futures, some of those were futures charts. Unless you trade futures, you won't get the actual volume. But at the end of the day, it's all we've got in terms of Forex, and it's good enough. It's an indication, okay? Hardy has said, is the 20 SMA very important? There's nothing magical about the 20 SMA. Price just seems to hug it in trending environments, that's all. So Centurion says, thanks, Mark, you're welcome. Okay, Interim Investor said, in regards to volume, since FX is OTC, how important is volume? I see volume keeps changing broker to broker. It is, but you have to take it over a period. In other words, volume is relative to the size of the bars, of course, where they appear, and it's relative to what's already occurred. Now, those of you that watch my streams, this is what we look for, because these are the best types of breakouts, biggest risk to reward to risk. Now, Vin has said in regards to UJ, we can maybe have a quick look at a couple of charts at the end. I'll just deal with the other questions first, if that's okay. Schroeder said the targets, when do I get out after taking the breakout? You can see most of these. Now, if you go and have a look back for yourself and back test, you'll see the way price moves. You'll see it moves quite hard. So don't be too quick to take profits. See what it's going to do. Let it push. But you've got to remember here, we've got a lot of disequilibrium. We've got a very low, when I say low agreement, we've got a real eagerness to get in. We've got a lot of buying pressure here. Quite often price will come back and test the breakout zone. So you imagine you're holding here, you've taken a beautiful setup, you've gone out to tea, half an hour later you come back, seen this, price is now back here. How do you feel? So you need to either use a couple of orders and set your take profits, or use a trade manager that allows you to get out. And when you hit 1.5 to 2R, make sure you bring it back into break even. Don't give anything back there, because chances are this area is going to be protected. Okay, I think I've answered that, MJ. VJ. So VJ said in breakout entry, we don't know how long it may go, so it may be a fake breakout too. So how will we book the profit at what price level? You want to take maybe 1R, 2R, and then try and let the rest run. So these sort of examples like this myself, I will take 1R, 1.5R, 2R, and then I'm going to let the rest run. So what we're doing is we're going for the home run, but if price turns around here and we the last quarter or the last third gets stopped out for break even, that's okay. It's still a good trade. We've still averaged probably 1.5 to 2R. So the old saying, go for the home run, but be happy with singles. FX Trendsetter said, so we just ignore those push up or down moves below the resistance zone and just wait for the scenario to complete itself. Look, ideally, quite often we don't get, now that's a great question too, quite often we don't get what we want. Quite often this will be more obvious on a smaller time frame. So see this structure here? This probably looks like, no, it's not a good example. This here, see this here, this right side here, on a smaller time frame. So you may have to drill down to a smaller time frame, but we want to see this consolidation beforehand if we can. Does that mean that if we don't get it, it's going to fail? No, it doesn't. It means the probability of it continuing is very low. See here. So on a smaller time frame, this might be nice and wide. So we look for these structures, and they say on a daily and a 4 hour, but the structure like this will become perhaps more obvious on an hourly. See here? I mean, this is a big drawn out one, of course. So Centurion has said, would it be wise to wait for a full candle to close above the resistance to enter the trade? Or is that too late? All right, let's have a look. This one here. When do we think it's going to become obvious to the crowd? What we're trying to do is get in an early entry. We're trying to see the cause here. All right, this is the cause. This is the effect. We want to be in just as this cause is now starting to show its hand. So the moves, quite often it will move hard. Right, that's a candle close. Candle close. That one's okay. Candle close. Candle close. Candle close. Okay, this one's okay. So majority of cases it's pushed hard. You want to just take the break. Okay. So good question, Centurion. So Mike has asked, are the probabilities of success less on a shorter time frame? Say the 15 minutes. Yes, they are. Because you'll notice, you'll see the shakeouts that occur going on more and more on the shorter time frames. Like this example here on the CAD yen. See here? See the amount of shakeouts, backwards and forwards. See here? Here's one here. Here's one here. Here's one here. Whereas it's not as obvious there. So absolutely, Mike. Now, folks, these are the areas where the bigger players are more likely to try and shake out the weak hands. So we expect false breaks. Does that mean we won't get caught in some? No, not at all. The probabilities are going to be less if you wait for these structures. So Shrewd Move has made a good observation. He says, I like the analogy of the big money moving the price. I like to look at what is happening in terms of the market movers who have positions to get into or out of to make their money. I try to be a barnacle and hang on to the Queen Mary whilst it's going in my direction. Very good. But let go all too often at the first sign of an anchor being thrown out. Yes. So, see, what we're seeing here is we're observing the cause of why this is happening. Always question, why is this happening? This is the effect. We've got to be getting in early, we've got to be getting in and recognizing this earlier. Right? So you heard me speak in the Trading Academy. That's why I spent so much time on the auction process and what drives price. Because when you understand what drives price, which is basically buyers and sellers as a group making decisions, you'll understand how these structures form. Okay, very good, VJ. You're welcome, Centurion. Okay, very good. So I encourage you to study these structures. So Robbie has asked, how do we get an early sense of consolidation on the daily chart? Is it 2 to 3 days of price going nowhere? That's one, Robbie. What we want to see in these examples is we want to see this impulsive move, this thrust, this push, where we've got buyers are eager, we've got buying pressure coming in here. The bigger players don't want to give up this leg, so they're going to hold price in this area. Look for this move here, nice move. If we don't have trending price action, look for the big stretch and the accumulation. Yeah, now I don't know how to pronounce your name. ASC. Do we trade breakouts on news based on news, or is it a riskier proposition? Okay, let's have a look. This example of CAD yen. See this here? This will be news. See, shake out either side. See, the bigger players are accumulating news. All right, let's shake out both sides, and then we just go back on our merry way. Okay? So the short answer, ASC, is no. I wouldn't take these breakouts on news. It's a coin toss. So Erebus has said Euro New Zealand is a good example right now from the morning stream. Yes, it is. So these are the reason we look for these types of setups because they're high probability. So study these structures. These big high pushes, if they don't fake out, something's occurring. There's a reason this has happened. Let's have a quick look at another couple of examples and then we better call it a night. See here, we've got the shake out the low. Here's the cause. Got the shake out, push back up, little volatility contraction, push into here. And then we've got this sideways. So what can't push down, move down, generally is being supported. Have a look at the common features, the common structures. See this here, push, sideways, push, sideways, pull back, high, low. Push, see this here, sideways, push, or here, push, sideways. Is our push, big sideways, push, sideways, push on volume. Bigger players are moving the market and holding it, ready for the pop. So here's our cup, here's our handle. A cup with handle is basically a base with an accumulation. That's all it is. This is why I like these patterns. I trade these day in, day out. These are some of my highest probability trades. So here, push, hold, push, A, B, C, even here, push, and a hold above. If you looked at this on the smaller time frame, it's probably an A, B, C. Let's go back and have a look at some of these others. See here we got the big stretch. No accumulation. See here, big stretch. There's a little bit here, not enough though. So there we go. All right. Very good, everybody. Miguel. So when the volume lines are very high, means lots of people pushing the price in that direction. Yes, Miguel. There's a lot of participation. There's a lot of trades have been executed. So as we said here, prove this works for yourself. Don't take my word for it. Yes, Vin, watch for the false break setups as well. So good question, Vin. Vin said, so no handle could mean we can sell too against the breakout. Yes, absolutely. You want to be watching for in these areas for a false break as well. But you want to see strength come in after the false break. So prove this works for yourself. You have to do this to gain confidence. Define the criteria as you see it. Create your playbook, variations of the setup. Train your pattern recognition skills so you can identify this in real time. All right, very good. Okay, folks. I hope that we covered a lot of ground in this session. There are different strategies once price breaks as well. So maybe in future workshops we can have a look at some of those. But it's important to pull apart some of these structures and some of these setups because you're welcome, Idris. You're welcome, Robbie. Miguel, Bluefin, good to see you. So we don't get a lot of time in the usual streams. So these are the best opportunity to dig into these deeper. You only need one setup. There's people that just use these setups and are very successful. So there we go. All right, everybody. Thanks for your company. And watch out for the next workshop next Wednesday at the same time. And remember, remain disciplined and trade safe. Okay. Bye for now, everybody.